This is a parabolic rise. This is not something that's sustainable.
The volatility is going to get more wild and more extreme.
The whole silver market is $100 billion a year.
Do they care if they pay 100 or 300? Because something has fundamentally changed here.
Welcome back to the Vancouver Resource Investment Conference.
It's great to have you all here today to discuss silver. Obviously, extraordinarily exciting times for the metal. I believe we're at about $109, somewhere in that range. 113 or 14? 114. Okay, this market just seems to be moving in a parabolic fashion, which leads to my question here, because obviously silver has run so far, so fast. Do you have any concerns here that we could see a dramatic correction on the other side, as we did when we look back to 2011 and 1980, when silver peaked those two times? We saw a dramatic correction on the other side. Do investors need to be wary of an event like that unfolding? Peter Kraut, I'll go to you.
Yeah, absolutely. I mean, this is a parabolic rise. We're, multiple percent above the 200-day moving average. This is not something that's sustainable. If we continued at this pace, I mean, it would suck all the money, from the markets into this one asset. It's not likely to continue. And, I looked at the numbers. If you look at the 2001 to 2011 bull market in silver, it went from $4 to almost 50. There were 5 corrections of 15% or more. The average correction was 30%. That would take us to 75, 80 right now. I wouldn't be shocked, and I think the miners would be pretty happy. So, I mean, I'm still pinching myself. I'm red all over from pinching myself.
And Peter, would love to get your thoughts as well on how you see the trajectory of this bull market moving forward.
Well, I think first thing that I want to mention is the volatility in this sector, in the silver sector, is going to get more and more extreme, and it's not going to be just on one side. So you have to be very careful with watching these day-to-day prices, because they can get quite emotional. So you have to have the stomach for it, and especially now, the volatility is going to get more and more wild and more extreme. I've been buying silver for over 30 years, since it was $4 an ounce. I'm not rushing out right now to sell it. This is why I've been holding it for a very long time. I never expected the confluence of factors to come together like this that we're seeing at this moment. We're almost seeing like a bidding war for the silver right now, especially in certain markets around the world where there's more and more of a physical shortage taking place. Not in the West here per se, but other markets. So it's a global silver rush. We just, brought in another phase of silver buyers. A Western retail silver buyer, which has been absent for a very long time, just entered into the bidding war for silver. So it's getting more and more wild, and I would be very, very cautious in trying to trade this, especially with leverage or anything like that. But I do think that we're in the revaluation phase. Silver could go a lot higher, but along the way we can get some very vicious pullbacks, and so one has to be ready for those events.
And Glenn, as the CEO of a silver company, you must be ecstatic over silver prices where they are today. In fact, when I talked to you last year at the conference, you were happy with much lower silver prices, and here we are at triple digits. What are your thoughts there? Has this market run too far, too fast, or do you think we're just in the early stages or somewhere in between?
I'm not near smart enough to compete with any of these guys as far as where it's going or where it's been, but I know when I was here last year, it was $30 silver and $2,700 gold. And I said something to everybody. I said 2 things. Peter Kraut said it's going up maybe past 100. I went home and I thought he was crazy. So I must apologize, Peter. I never thought I'd see it. But what I will say is this. At those prices, I told everyone here, we're building currently a surface mine, heap leach, silver mine in Mexico. And we're embarking to build our underground mine. At 2,730, both of those projects were extremely profitable. Maybe we get a chance later when we talk about what the price means to talk about what that generates, but this is phenomenal. It does not have to be here for us to build. It does not have to be here for us to make a lot of money. At half this or more, our projects are extremely profitable, and many are. But boy, what a windfall for these companies. And you're going to see that value, I think, in you see it already in the producers. But the developers moving to production, I think if this holds, the reward on those companies is going to be incredible. So I'm not going to guess. It's great it's here. It does not need to be here for us to have a very, very, very successful market where people can make a lot of money investing in miners.
And Maria, as the Chief Investment Officer at Sprott, how are you guys viewing the silver market right now in terms of the dynamics at play and how quickly the price has risen? Is this a time that you believe caution is warranted, or is it full speed ahead?
Well, we've been waiting for this a long time, like these guys here as well. Of course, we have various products, and our mandate is to be fully invested. So our physical products are fully invested. Our equity products are usually close to fully invested. So for us, it's always kind of a relative game. So in an equity portfolio, we'll just rebalance based on valuation and fundamental factors in terms of different equities stacking up. And in the physicals, we're always fully invested. And I would answer your first question, whether I'm afraid of a correction. I actually want a correction. I like steady, to me, the way gold is behaving is much more sustainable. I think, as Peter said, the parabolic move up is not generally sustainable. And I think the opportunity will come, instead of trying to chase it right now, I think the opportunity will come if we finally do have a correction. Instead of getting scared, I would urge people to sit back and think about the reasons why silver ran in the first place and whether those reasons are continuing right now, and they will. I think the fundamentals haven't changed for silver. Using corrections as opportunities to reload, to enter, to buy things that you like as an investor.
Let's talk about the tailwinds currently driving the silver sector. There's a very large amount of them from supply deficit, according to the Silver Institute. We're now in our 6th year of a supply deficit. Obviously, there's monetary debasement, which plays a role because silver has been money for thousands of years, and there's many other narratives out there at present. I'd like to maybe separate the signal from the noise, and Peter, maybe you could walk us through the catalysts you think are most important for silver right now.
So great points, Jesse. I mean, the Silver Institute themselves have said that they expect silver supply deficits to continue for the next 5 years, and that we would see record deficits at some point in the next 5 years. Look, silver from mine supply peaked 10 years ago. Demand has been rising, and we've averaged anywhere from about 15 to 20% per year for the last 5 years above supply. If you add up the last 5 years of deficit, you're looking at an entire year's mine supply. And if you look forward, there's no meaningful growth in mine supply. We might get a little bit of a bump from recycling. Absolutely. If you look at how mines work and a much higher silver price, a lot of projects now start to become more economic. But you have to be careful with that, because some miners that have the ability, the flexibility, they'll start looking at their deposit, and they'll say, well, at $80 or $90 silver, I don't need to mine my highest grade stuff to make the same money. I can mine my lower grade stuff, meaning they'll produce less silver, make the same profit, and exacerbate the shortages, and you may get less silver coming to market. So there's all sorts of dynamics. Think about the fact too that the US imports 43% of the silver it consumes every year. Talking about export bans from China, for example, that's sort of a new dynamic, sort of. It's I think maybe a little bit overblown, but China controls 60 to 70% of the world's refining capacity for silver. So a lot of the silver that's consumed needs to go through China to begin with. As Glenn mentioned before we hopped on here, I'll let you maybe talk about that a little bit more, but sounds like we may be getting a new refining installations in the US, but like Peter commented, well, let's see whose backyard that's in and how fast that happens, and that's a whole other game. But there's just so much going on. The drivers, we haven't even talked about investment demand yet. So in the West, bullion dealers are telling me they're buying more than they're selling. So, and yet the price is going up like crazy. So it seems like the buying is more east from here, Eastern Europe, Europe in general, definitely that's the feedback I'm getting, and Asia is very strong buying. You have lineups in Singapore, in China, in South Korea. So I would not expect these drivers to lessen in any way. The one thing, though, to keep in mind maybe is that this is going to wreak a little bit of havoc if we stay at these really elevated levels on some of the industrial consumers that use a lot of silver for whatever they're manufacturing. They're going to have to either boost their prices, look for substitutes, or start passing on costs. So.
Peter Spina, I'd like to get your thoughts as well on the catalyst driving the silver market, and also if you could maybe contrast silver and gold and the differences between them, because you've stated in the past that you buy gold not to make money, but to not lose money. Silver seems like a different beast at this point, considering how far and how fast it's moved. How do you differentiate the two in your portfolio?
Well, so yeah, you buy gold to prevent losing money, you buy silver to make money, to make more gold. I like to say that silver is the most strategic, critical, greenest precious metals. And there's a confluence of factors that has been brewing that's coming together now, which has taken many years to develop. You've had the industrial demand at record highs for many years, which has eaten away at existing above ground stockpiles. Unlike gold, there's stockpiles of gold out there sitting out there. Silver doesn't have the same, it's actually consumed for industrial purposes. If we wouldn't have a modern civilization without silver, so it's used in a myriad of different places. Which is interesting now is silver is very critical to the national defense of the United States, of China, of big superpowers. So it's becoming weaponized. We added silver in the United States as a critical metal last fall, like copper. So you can see it's becoming a critical metal from a strategic, from a national defense purpose. So there's probably stockpiling occurring on that level right now. And what's really interesting now is that you've had the absence of the investor in the silver side for many, many years, which they've actually been selling silver off for years. It wasn't really until last year where they flipped into a net buying mode. So we've had this structural supply deficit taking place for many, many years. There's been silver investors selling their silver, and now they've flipped into buying. So you've had this additional source of silver hitting the market. Now that's gone. So you've got so many things happening at once in the silver market. It's more dynamic. It's more serious than the gold market because silver is so essential in our daily lives and for our national defense purposes. So I came to this conference the last years talking about the biggest event that took place recently was in 2022 with the war in Ukraine starting. That really launched accelerated timelines. We're in a world war, I call it World War III, which is fought on multiple battle fields. It's not just a proxy war in Ukraine. It's monetary, it's commodity-based, it's resource wars, and we're seeing all that hitting right now. So silver is in the center of all this. So I think it's being recognized now that this is a very critical situation in what's happening with various commodities. Silver really has both aspects of it. It's got the industrial and the monetary side, and both of them are on fire right now. So unlike gold, silver benefits from that as well. It's been extremely undervalued. Last year I was saying if you want to buy gold near $1,000 an ounce, you buy silver. We were trading at nearly 100 ounces to 1 ounce of gold. I mean, for years, silver's just been left to dead. Everyone's chasing crypto, AI. Just again, they were selling their silver, and suddenly it's like, okay, well, look at the fundamentals. They're extremely bullish, and now we're really seeing shortages, supply squeezes in parts of the world, which is we're seeing the price of silver bid up. So it's a lot more interesting than the gold price. It's going to be a lot more volatile. It was a lot easier back last year to talk about $50 silver and $100 silver price targets. Now we're in uncharted territory. This is historic. It's not something that you can resolve overnight. Mines just can't flip on their production, double production. The people who have been owning silver, like silver bucks for the last 10, 20, 30 years like myself, I'm not interested in dumping my silver right now. I might start taking a little bit off the table, but I think you're going to need, the incentive is going to be a lot higher silver price to get those existing silver supplies out there, which are really the only big stockpiles left. So a few comments.
Well, let's dive into the silver mining sector a little bit here, Glenn. And I'd love to get your thoughts on the current health of the sector, because interestingly, throughout last year, around the middle of the year, we saw the silver stocks provide a bit of a levered play on the silver price. That continued until the end of the year when silver suddenly shot up and actually caught up to the miners if we look at the SIL ETF or the SILJ ETF as proxies. On a percentage gain basis, silver actually outperformed them, and then now I think we're sitting at about parity. So obviously that looks like there could be a big opportunity here in the silver miners. Do you think that's the next leg of this bull market?
Look, I'm going to talk from the perspective of what I think about. I told you everybody this last year. I hope the people that may have been here remembered. At Silver Tiger, we in the next 18 months will be the next silver mine to come into production in Mexico. Why is that important? 3 numbers, 56, 52, 46, and 38. You remember? Last year we had 52 primary silver mines in the world. No one's talking about this. This year there's 46. In 2027 there'll be 38. I told everybody also that we'd be 39, and I think everybody knows we've got our approvals now to build our surface mine and underground, and we will be. Very, very important. Now it's a little self-serving, but it's important. You just said something. What's the average time from first drill hole to a commercial mine? Does anyone know? 17 years. And the facts and the numbers are also for exploration projects. I'm not against exploration, we all start there. But from that first drill hole to become a commercial mine, it's 1 in 1,000. Go plug it into AI. So if you think that we're gonna solve this, 38, well 39 with us next year, it's not easy. It's so hard. And sure, will this price help? It will. But people have to realize this is not getting fixed. If silver goes from where we are right now, I don't even know where we are, $1.14 to $90, and everybody's hair is gonna light on fire. No, it's gonna light on fire. That's what's gonna happen, and y'all know it. But that's not the important part. There's not enough. And you mentioned something. I saw strategic, I used it in marketing, you have to, when the US, this is very important, in September, made silver a critical mineral. And if you read that, why? For all kinds of reasons, but for the strategic defense of the United States of America. That's what it said. And then what you were talking about, this is when my eyes really open. Look, we see, is this a geopolitical battle between China and the United States and silver's a weapon? Sure, go, y'all read all the stuff that's out there where you say, okay, the Chinese they smelt 70% of the world's silver, they're not gonna export it, the US needs silver. I think he who controls AI is gonna control the world with respect to defense. That's what I really believe. And when that announcement came a month ago, JP Morgan, 8.4 billion, 40% owned by DOD, 60% owned by the top smelting technology company out of South Korea, being built in Tennessee. They say 24 months, that's a stretch, I think. That's the first one since 1950. You don't think that silver strategic? And if that input is needed, this is what I think. Besides the 38 and us being 39, that's important, and everything I said, but they don't care about what the input price is, in my opinion. If you're building $1 billion, whatever kind of weapon, and you need that much silver, it's such a small input. Do they care if they pay 100 or 300? Because something has fundamentally changed here. And we've been doing this, our group at Halifax, for 30 years. Something's changed. I'm just putting out some of my thoughts here, but I'm pretty happy that next year we're gonna be number 39. That's pretty exciting. And we're gonna try to help as much as we can, but I don't think it's gonna be a drop in the bucket of what's gonna be needed.
And Maria, would love to get your thoughts on how you're approaching the silver mining sector at Sprott, because as Glenn mentioned, there's so few pure play silver mines around. Silver is mostly mined as a byproduct of other metals, copper, lead, zinc, gold as well. So when it comes to the supply side, it's very difficult to suddenly ramp it up in the face of this silver deficit. How are you approaching the silver market with all of that in mind, the silver mining stocks?
So before I talk about the miners, first of all, I'd like to say these guys did a great job summarizing the case for silver. But I want to put the silver market in perspective. We mine and produce between scrap and mining supply 1 billion ounces a year. At $30, that was a $30 billion market. At $100, it's a $100 billion market. It's nothing. It's so tiny. We have companies that trade at $1 trillion valuations in the market. The whole silver market is $100 billion a year. So it really does not take a lot of money to move the price. And I think that's why it's gone from $30 to 100 in no time at all. That's just an aside. Now, to go back to the deficit, to put the deficits in perspective, yes, we have been in a fundamental structural deficit for at least 5 years. And I actually think we've been in it for at least 7 years, but that's a different story. Well, the deficit has varied between 100 and 200 million ounces, so between 10 and 20% of supply. Let's take 200 million ounces as an example. In order to plug that hole in supply annually, we need at least, what's a good mine, Glenn? 10 million ounces? Is that a good mine?
That's a
well,
beautiful size.
Well, we need 20 of those then. Just to plug, just to go to even, we need 20 decent silver mines. Glenn, do you see 20 decent silver mines?
No, there may be. You could count on one handful what we might see coming in production in the next 5 years. It's incredible.
And what we are seeing, and to your point, I do a lot of research on equities and mining companies specifically. We are seeing grades declining as time goes on. We're seeing fewer discoveries, and we see this in copper, in gold, in silver. We're just seeing fewer. We're starting to throw more money at exploration, but we're still not seeing that pickup in new deposits, in new big discoveries. It's harder and harder to find big mines. And someone mentioned that it takes almost 20 years to get a mine into production. That is very, very true. But what's also true is that the quality of the mines has gone down over time. Okay, so in what I do, it's becoming harder and harder to pick stocks, in the silver mining stocks. So for me, again, it's all relative. I always look at the quality of the deposit. I obviously follow management teams over time to understand who I can trust and who I cannot trust. We look at valuation. I personally value companies usually using spot. So when I look at the universe of silver equities right now, they are not pricing in spot, not at all. If you plug in $110 or $100 silver price into the NPV calculations, these things are trading, I don't know, less than half times NAV. So I think the market, to your point, hasn't been buying into this price run. The equity market hasn't been. And if it does, eventually, as time goes on, and I think it's a matter of time, the market usually takes time to say, okay, I believe this. I believe this price going forward. Right now, I don't think the market believes this $110 price. But that's why I'd like a correction, just so that time goes on and the market starts buying into this and starts re-rating the stocks. Does that make sense?
Yeah, absolutely. And Peter Kraut, when we ran into each other the other day in the conference and we were chatting about the silver market, you mentioned that you think silver equities are the next place to go. And as I interviewed Rick Rule recently on my show, and he said he sold 80% of his physical silver and rotated a lot of that into the silver mining sector, meaning he's seeing a big move up ahead for silver miners. So would love to get you to break down your thoughts there and where you're seeing value right now.
Well, first thing I want to say is thank you, Rick, for making my job easier, because a lot more people listen to him than to me. But if you really want to know how I reach basically that same conclusion, come to my workshop at 1 o'clock, because that's exactly what I'm going to break down. But for the time that we have here, that's the same conclusion that I've come to. And to Maria's point, very nicely laid out. Someone who does same kind of work as you, Ned Naylor Leland, who runs the $3 billion Jupiter Asset Management Gold and Silver Fund, said not long ago that producers, from his perspective, are trading at about 2 times net asset value. That was a week and a half ago. I'm sure that's changed a lot already, but developers are at 0.2 times net asset value. So just for developers to make their way up to the same kind of valuation as producers, you have a 10x. We haven't even talked about, large deposits from juniors. It's not priced in. Analysts are using, what would you say, Maria? What kind of price are analysts using today?
Well, I haven't checked. I don't think they can keep up, frankly. And what
has
I
to be
do
real
know
time.
about analysts' projections is they always have the price go down in time,
That's right.
which is
So,
even
interestingly-
contrary to the forward market, really.
Exactly. Your boss said something very appropriate last year. Eric Sprott at PDAC said something that has stuck with me. And he said, my advantage over almost all other investors is that when I price a project or a price, what kind of valuation I should put on cash flow from a producer, I use spot prices. Almost nobody else is using spot prices. They're arguably maybe 2/3 below spot price. So when the next few quarters come out and these cash flows are being priced in and the market starts to realize what kind of cash these projects are generating, I think that's when the reality will start to set in.
Peter, can I help you there for a bit? Because I'm familiar with consensus because we put out economic studies all the time. So we put a PEA out for our underground mine last week. So we had to update our pricing, but it's moving. So when we did the PFS for our surface mine heap leach, it was 2150 and 26. That was only 18 months before, and the consensus, which we're using bank consensus, consensus pricing, when we just put our study out last Tuesday, we were at 38 silver and 3,200 gold. So the smart people, if they're smart, they've moved a long way. So consensus has greatly moved, and that's a little bit of information might help you, and we see that.
It's still far from current.
Well, of course it is. I like to do my math in my model at current spot. I'll talk about that later.
If you're a bull, come to your own conclusions of what kind of prices you should be using.
Well, I said earlier that my theme last year was if you want to buy gold near $1,000 an ounce, you buy silver. This year, my theme is if you want to buy silver near $30 an ounce or under $50 an ounce, you buy silver stocks. They are so undervalued. They're so far behind the silver price. Last quarter, silver miners sold silver for $50-some an ounce. The analysts are so far behind the curve. They don't get it, and they will get it when the quarterly numbers come out, and they'll see the massive amount of growth in free cash flow. Profits are going to start going through the roof, and Wall Street's going to take notice, and there's going to be a big rush into the silver sector. It's such a tiny little sector, and I think what will happen is we'll see the prices bubble. We'll see it overshoot where they should go. But we've been through a huge, long period where the silver stocks were way below where they should have been. So we're going to start, I think, seeing the opposite of it. So I think this is the year where the silver stocks are going to have their big, and gold stocks as well have their big catch up.
So is the question really what silver equities I like? Buy Silver Tiger. We're all done now. See ya. No, kidding. What I think, and I'll tell you a little bit what I think. I think that in this market, if you can find them, and there's not many, we just talked about that, the developer who's done all the work, decade, and spent all the money and I think this is a long-term change in the silver price. I alluded to that. It may go to 90, but there's not enough mines, there's not enough product for what I think the world's going to do. Then the developer going to producer, find them. Self-serving because that's us, but I think that's going to be an alpha return. Using an example, we were here last year, and we had some things to do, and it's important to understand how you value these companies, and I'm giving a little bit of advice on that. Try to be quick. We were waiting for the approvals to build our surface and underground mine, and there's risk in that. But even through that process, and we were very fortunate to get that in the fall, all of that, we were 5 bangers since last year. That's pretty good. Now, I use that as 500% is what I should use, but I know how some of the investors, a 5-bagger, they use that. But now it's a different world. Find those companies that have done the economic tests at 38 silver and 3,200. We make a ton of money. But what you just said, and basically impressed on me. Go look at what they do at spot. Our project generates an NPV Canadian. We do some rough math, of 3.7 billion Canadian. We're trading at 700. Most in production mines in different jurisdictions are different. Mexico could be anywhere from 0.9 to 1.2. Do the math. It takes 18 to 24 months to deliver something like that. But I think that's the kind of appreciation. It's real, not just hype. Oh, silver. Look at what it makes. And then we make a great return at a quarter of that, at half of that. So, do your work on that. I think that you just need to look at, if I was giving any advice on equities, who's going to make the silver in the next 5 to 10 years? Because I think it's going to go parabolic, what the world's going to need for all those reasons I mentioned earlier.
Excellent discussion, a masterclass on the silver market. Thank you all so much. Ladies and gentlemen, a warm round of applause for our silver panelists today.